Good morning, viewers. It's Monday morning, April 14, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Wall Street's gyrations shook markets anew, with stocks erasing losses to notch their best week since 2023. Wall Street posted solid gains on Friday, and investors closed the book on a turbulent week of wild swings driven by chaos of multi-front trade war. One of the most tumultuous weeks in years for stocks ended with major US indexes higher, highlighting the market volatility unleashed by President Trump's trade war. Volatility showed little signs of easing. The trade war has caused wild intraday market swings and driven consumers' near term inflation expectations to their hottest level since 1981. One sign of the volatility, the difference between the weekly high and weekly low for the S&P 500 was the widest since March 2020, when much of the world was locked down during the pandemic. Stocks were whipsawed throughout the week by a tariff reprieve on European goods and a tit for tat escalation in the trade war between the US and China. China also hit back in an escalating trade war. Beijing retaliated to Trump's recent hike of tariffs to an effective rate of 145%. China boosted tariffs on the US to 125% and scoffed that further levies by President Trump's administration would be seen around the globe as a joke. China said it wouldn't continue to match any levy increases by the US. Also on Friday, Canada's Prime Minister Mark Carney said his government will counter unjustified US levies of 25% on steel, aluminum, and cars and inflict maximum pay. French President Emmanuel Macron said that the partial suspension of US tariffs remains fragile and European Union must continue to prepare countermeasures to defend itself. EU Trade Chief Maros Sefcovic will meet US officials in Washington on Monday. The day began with an upbeat update on producer price inflation, but markets mostly shrugged that off given tariffs may send price spiking in the months ahead. Stocks dipped when a closely watched survey showed consumer sentiment soaring to one of the lowest levels on record as fears about recession build. Economic data offered little evidence that inflation continues to cool, with the Labor Department's producer price index unexpectedly falling by 0.4% last month. The University of Michigan's Consumer Sentiment Index dropped to a 50.8 reading in April, below expectations of 54 and down from 57 in March. The one-year inflation expectation spiked to 6.7% from 5% in March, a level of pessimism about costs last seen in early 1980s. All three major indexes posted gains from last Friday's close. Nasdaq led the indexes on Friday. The S&P 500 and Dow notched their largest weekly percentage gain since November 2023, while the Nasdaq registered its biggest weekly percentage advance since November 2022. The Dow Jones Industrial Average on Friday rose 1.56% or 619 points to 40,213. The S&P 500 gained 95 points or 1.81% to 5,363. And the Nasdaq Composite gained 337 points or 2.06% to 16,724. The major indexes all snapped two-week losing streak as stocks finished the week higher. The Nasdaq Composite ended the week up 7.3%, while the S&P 500 added 5.7% and the Dow advanced 5%. Though the stock market wrapped up the wild week of trading with some solid gains, worries in the bond market took center stage. Fresh signs of strain in the US economy and the flagship US assets such as the dollar and treasuries faced renewed selling pressure, with the 10-year yield finishing its sharpest one-week rise in more than 2 decades. The yield on the 2-year treasury note rose to 3.95%. The 10-year yield jumped to 4.49%, marking its largest one-week gain since November 16, 2001. The 30-year yield surged to 4.87%, marking its largest one-week gain since April 24, 1987. While the sell-off in bonds eased somewhat on Friday, until treasuries stabilize and start to behave normally, risk assets will struggle. The rout in treasuries, which was set off by the trade war that shaken global markets, is threatening to deal another hit to the economy by pushing up borrowing costs more broadly. It also casts doubt on their status as the world's safest haven, sending investors into other assets like the Swiss franc, Japanese yen, and gold. The chaos underscores fear foreign investors are beating a retreat from American assets. Meanwhile, the US dollar fell Friday for a fifth straight day, its worst week since 2022, while the euro surged. Gold has soared to fresh all time highs, reflecting concerns about geopolitical conflict. Spot gold rose 1.7% to $3,231 an ounce. Bitcoin rose 4.9% to $83,782. And West Texas Intermediate crude rose 2.4% to 61.5 cents dollars a barrel. Once the White House announced it had 15 trade deals offers on the table as countries began to outline proposals for agreement with the US, and Boston President Susan Collins said market volatility in recent days doesn't appear to have interfered with investors' ability to trade. The stocks turned higher. Susan Collins said that the Fed is prepared to keep financial market functioning should the need arise. In addition to Collins' reassurances, New York Federal Reserve President John Williams said the U.S. economy is not entering a period of high inflation and low growth, and the U.S. Federal Reserve will act to keep so-called stagflation at bay. JP Morgan's Jamie Dimon said the economy faces considerable turbulence even as his bank reported quarterly results aided by blockbuster trading volumes. JP Morgan Chase and Company Chief Executive Officer Jamie Dimon said he expects a kerfuffle in treasuries that promotes a US intervention. Big banks kicked off first quarter earnings season. First quarter reporting period got off to a solid start. JP Morgan Chase, Morgan Stanley, and Wells Fargo all reported better than expected profits, but warnings of a potential economic slowdown due to trade disputes dampened enthusiasm for the sector. JP Morgan stock traders took in a record haul in the first quarter, but CEO Diamond struck a cautious note about prospects for the US economy. Wells Fargo and Company missed estimates for net interest income, with soft loan demand hurting the bank's largest revenue stream. Morgan Stanley stock traders delivered first quarter revenue that exceeded analyst predictions. Aside from the banks, investors will be eager for details on the US economy from executives whose firms cater to large swaths of American consumers and businesses. My take: shifting pylons to keep top ports very quiet. Variations of uncertainty, unknowns, and turbulence arose again and again throughout last week. Volatility itself is not a healthy sign. The sharp intraday rallies may seem comforting on the surface, but the whipsaws are a manifestation of overarching uncertainty. Roller coaster is not a technical term, but it is probably the best adjective to describe price action across equity markets last week. Sentiment is the main market driver as there is little visibility. Markets remain emotionally charged. They are still searching for footing amid unresolved trade tensions, earnings uncertainty, and macroeconomic headwinds. While last week's gains are encouraging, they shouldn't be mistaken for a clear turning point. News for how companies plan to navigate the trade war's shifting pylons will be a central focus throughout the coming reporting season. In fact, the market wrapped up a week for the history books as the US narrows an initially broad net of tariffs in what appears to be an attempt to largely shut down trade between China and the US. Investors and companies are in the midst of this tug of war, looking for some positive signs. As a result, the top ports in the US are expected to be very quiet in the coming months. And that's the wrap for today, my dear viewers. If you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you now again tomorrow morning. In the meantime, happy investing. Stay inspired and remember, it's all about money.